The Evergrande situation, it seems very particular to China.
At this point, I don't see this developing into a global crisis.
There is the potential for second and third order impact.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 23rd of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Taper timing. The Fed signaled that it's probably ready to cut bond buying in November, and a rate hike may not be far behind. The markets aren't convinced. Evergrande shares and bonds rally from lows as investors bet it will avoid a disorderly debt resolution, but it's yet to make payment on a 5-year dollar note. And John Kerry calls on the world to step up and fight climate change ahead of COP26. We'll speak shortly with the London Mayor Sadiq Khan as he unveils a new initiative to make the city green. Now, we're just getting some breaking news out of Norges Bank. Interesting, we've had so many interest rate decisions. The S&B, of course, just moments ago, leaving things unchanged. But Norges actually hiking its key rate to 0.25%. Now, we were expecting it to be the first G10 central bank to hike that because of the nature of the economy. I'm not sure we'll put that extra bit of pressure on, for example, the ECB, the Bank of England, or even the Fed, of course, to hike. But it will mean a difference to how markets maybe interpret some of the transitory inflation. 12 p.m. London time, the Norges Bank Governor, Øystein Olsen, will be live on Bloomberg TV. Now, this is what your markets are saying today. We are seeing a lot of green on the screen. The stocks Europe 600, you can see gaining some 1%. Partly this is because of what we heard from Jay Powell. The market, I mean, he threw them a bone, and the market kind of saying, yeah, you'll raise rates, but not anytime soon. And for the moment, it's been telegraphed and hasn't been actually repricing some of the asset classes. The DAX and the S&P futures also gaining some 0.6 or 1%. The focus is on Evergrande. And I think the question is there, after the huge sell-off that we saw on Monday, is it really the right resolution? We know that PBOC injected money. Maybe there's a bit of, something to be said about that. Here in the UK, we have two energy producers going bust, something that we need to keep an eye on. The DAX gaining 1%, the CAC 40, 0.8% higher. So it's a key test for Evergrande today. That's as the distressed Chinese developer faces a dollar bond interest payment deadline. Now, the company's stock rallied before pairing the advance, which may be an indication that investors remain wary over debt talks. Central banks and business leaders also weighed in.
The Evergrande situation, it seems very particular to China. There's not a lot of direct United States exposure. The big Chinese banks are not tremendously exposed.
While we must monitor carefully for a spillover effect on financial markets globally, at this point, I don't see this developing into a global crisis.
There is the potential for second and third order impact, particularly on the capital markets and the bond markets. And we've got to stay close to that.
They own everything. They own the land. They own the companies, the banks. They control the news. So I don't see this kind of loss of trust that actually brought Lehman and the whole system down.
Well, the Evergrande crisis taking a toll on funds in Europe and the U.S. that have chased high yields in the Chinese corporate bond market. The situation has weighed down funds managed by Ashmore Group, Blackrock, UBS, and HSBC, amongst others. Well, we're now joined by Scott Thiel, Chief Fixed Income Strategist at Blackrock. Scott, great to have you, especially on a day like today where the markets seem actually quite exuberant. They seem pretty cool about what's happening with the Fed and Evergrande. How do you see Evergrande actually going from here? Well, how much of a concern could it be to the world economy?
Well, I mean, I think, it's too simplistic to say this is not a Lehman moment for China. And I think that kind of paints over some of the complexity, obviously, that exists in China and also at the company level. But taking a step back, I mean, I think the way to think about this is in the context of China has very much been on a path of implementing social change, address things like pollution, inequality as examples. But they're also obviously focused on growth. And so as we see growth decelerating, growth in China was around 17% at the beginning of the year, decelerating to around 7% mid-year. Our estimates are that it could come in around 3% towards the end of the year. That's below their growth target. And the reason I bring that up, Francine, is that it's going to matter if it's that much below. And so we don't see this as
Scott,
becoming,
How much does it matter? Who does it matter to most?
Well, I think it matters obviously to the real estate sector in China. But as noted by some of the comments from central bankers, right, the exposure to the financial sector, for example, is very small. on an overall basis. So I think it matters in a sectoral basis, particular parts of the Chinese economy. But overall, I would say it's, again, not a Lehman moment in that sense. But obviously, we have to watch the contagion. Property prices would obviously be a focus for us as we go through time. Thus far, they haven't shown a substantial pullback, but that would be one area where we'd be focused on.
Scott, how do we understand the second round and third round effects at this moment? Could we be actually misunderstanding the situation?
Well, I mean, I don't think misunderstanding is the right way to think about it. What we're trying to do is observe where we can see the impact, right? And so, for example, we look at the banking sector's exposure to Evergrande. It's relatively small, 0.2%, roughly. And so what we're going to do is we're going to watch as the sectors that are most impacted by the company, as that evolves. We'll watch how those unfold, and that'll give us a telltale sign as to the broader impact on the economy. But again, yet we have not seen that. And in particular, again, I think the Chinese authorities are going to be focused on not having this impact the growth trajectory of the country too much, and therefore, at the margin, we saw a reserve ratio requirement cut. We've seen injection of liquidity, as noted last night and the day before. Mm-hmm. Those are indications, right, that the levers that China can pull, whether it's monetary policy, fiscal policy, regulatory policy, are going to, foreshadow a more supportive background to help the country through the crisis of the company, but importantly also to address the growth concerns.
Thank you so much. Scott Thiel, Chief Fixed Income Strategist at Blackrock, stays with us. We'll, of course, talk about the Fed, and we'll also talk about the Bank of England shortly. Don't miss our special coverage of the Evergrande situation right here on Bloomberg TV. That's the Evergrande Effect, coming up on Friday morning, 2:30 a.m. UK time. Now, coming up, Jay Powell signals the Fed could start tapering in November. The Fed chair also says rate hikes might not be that far behind. We discuss that latest next, and stay with Bloomberg Surveillance Early Edition. Later on in the program, we also speak to the London Mayor, Sadiq Khan. If you have any questions for him, IB Plus TV Go. This is Bloomberg.
We continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. While no decisions were made, participants generally view that, so long as the recovery remains on track, a gradual tapering process that concludes around the middle of next year is likely to be appropriate. Half of FOMC participants forecast that these favorable economic conditions will be fulfilled by the end of next year. As a result, the median projection for the appropriate level of the federal funds rate lies slightly above the effective lower bound in 2022.
Well, it's almost taper time, and rate hikes may not be far behind. That was the message from the Fed Chair, Jay Powell. Let's get back to Scott Thiel, Chief Fixed Income Strategist at Blackrock. But Scott, really, the reason why the market seemed quite cool about it is that there is a clear timeline, and this was, what the Fed wanted to do, in some parts also what the ECB wanted to do, which is, tell the markets cool off. We're tapering. It doesn't mean we're hiking rates straight away.
Yeah, that's right. I mean, I think they've done a fantastic job. We were talking about this a second ago. I don't like the word divorce, but they've divorced the tapering from the rate hike process. And so the markets are very comfortable with that. They're very comfortable that they've telegraphed the tapering. There will be a period of time in 2022 when the taper is over before they begin the process around liftoff. And the market is very comfortable. Look, it's a central banker's dream when your 10-year note or your 5-year note is more or less unchanged on the day of a policy meeting, and the 5-year was a little bit higher in yield. The reality is the volatility in the Treasury market has been unbelievably low, right, over the last month or so, even around what's happening in China, which I think is very interesting. But the idea is that this has been very telegraphed, very clear, very transparent, and so the markets like that, right?
So, Scott, what does it actually mean for Treasuries? Is there anything that you'd be buying right now?
Well, I mean, the Treasury market in our mind is, we see pathway for rates to be gradually higher, right? We're in an environment where as the Fed has talked about, the inflation target has been met, but the employment target is still something that they're watching very closely. In that environment, we see rates rising, but not dramatically over the next couple of months, couple of quarters. And so for us, we are underway Treasuries in our asset allocation on the view that, that we are at the precipice of a taper and then eventually a liftoff. And given valuations and particularly low level of volatility, we think Treasury rates will move higher.
All right, Scott, let's also talk about the Bank of England. Just a few weeks after warning that interest rates need to rise in the next few years, the Bank of England finds itself facing a delicate balance of risks as the recovery stalls and inflation accelerates. Now, you could call it the central bank policy puzzle. So we'll get back to Scott in a second, but let's also get to our economy reporter, Lizzie Burden, who's outside the Bank of England. And Lizzie, we're just talking about the Fed. Brexit complicates matters in terms of labor shortages and possible inflation pressures.
It does, and there is the risk that unemployment spikes in the UK when the furlough scheme ends at the end of September this month. But at the same time, you've got the inflation number from last month. It surged past the bank's 2% target to 3.2%, which is why there's a difference between what economists expect. Bloomberg Economics doesn't see the first post-pandemic rate hike until the second half of next year. But markets are pricing for borrowing prices to increase in the first half because they're focusing on the inflation. There's that difference. It's all the uncertainty that the Bank of England faces in its dilemma of how much stimulus the economy needs to recover from this recession.
Lizzie, thanks so much. Lizzie Burden there outside the Bank of England. So, Scott, what are you expecting from Andrew Bailey today? I think, Scott, we're just having a couple of issues with your microphone, but we'll get that fixed, hopefully, and we'll come back to you very shortly, of course, on what to expect from the Bank of England and possible moves also in gilt. Scott, I hear, and I've been told that actually we can now listen to you because your mic has been fixed. What are you expecting from Andrew Bailey? Second time lucky.
Sorry. I figured after a year and a half of this, get this right. But in any event, sorry. We don't expect any change today, and we don't expect any votes for a rate hike. I mean, I think that the bank, continues to face this dilemma which policymakers are facing globally, which is you have very high near-term inflationary pressure, but expectations for that to tail off as we go through time. Obviously, the banks that do not have this average inflation targeting framework the Fed has implemented, the question about how high inflation prints now impact policy decisions going forward. It's something we talked about with the ECB. It is an interesting topic, but no expected change today, and also no expected votes for a rate hike today.
But Scott, could you see, so we had, of course, Norges Bank being the first G10 central bank to hike. Does that put any pressure on any of the other central banks to start moving maybe more than the market is expecting?
No, I don't think necessarily one bank presses the other. Obviously, I think it's more about the inflationary dynamics in each country, and obviously the policy framework for each country. Right. Again, I think it's really important. We talked about the ECB at the very beginning of this conversation. Right. Past right, Elga Barsh has said, "Let bygones be bygones." I think that's a very interesting way to put it. Right. High inflation prints now don't necessarily impact policy rates going forward if inflation were to come down. And that's obviously very different than an average inflation targeting framework like the Fed, for example. So no, Francine, I think it's the Norges Bank is not going to pressure the Bank of England in that sense, but obviously the inflationary environment would be the thing to watch.
Scott, thank you so much, as always, for your insight and wisdom. Scott Thiel there, Chief Fixed Income Strategist at Blackrock, joining us today. Of course, at 12 p.m. London time, the Norges Bank Governor Øystein Olsen will be live on Bloomberg TV. That's after Norway's central bank hike its key rate to 0.25%, and that's also the time where we expect the Bank of England decision. Now, coming up, exclusive networks, Paris IPO debut raises 366 million euros. It's the latest in a string of cybersecurity offerings as concerns grow about the spike in ransomware attacks over the last year. More on that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there is quite a lot of going on in the markets. Actually, we're seeing green day across the board, but we've had a lot of central banks coming up with interest rate expectations. Of course, yesterday, the big one was the Fed, and this was something a little bit new, actually, just because stocks are gaining after the Fed taper guidance. Now, cybersecurity firm Exclusive Networks fell as much as 1.5% earlier this session after the company and its holders raised 366 million euros in a Paris IPO. Now, the listing adds to a string of cybersecurity offerings. That's as 2021 saw a sharp increase in ransomware attacks globally, including the hacking of Ireland's health service, as well as the Colonial Pipeline attack, which led to fuel shortages across the eastern U.S. Well, we're now joined by Jesper Trolle. He's the chief executive of Exclusive Networks. Mr. Trolle, thank you so much. On such an important day, also joining us to talk about the future of cybersecurity. Is it getting much more expensive? Is it getting much more difficult to try and stop some of these attacks or ransomware?
Yeah, first of all, thank you for having me on this show on this big day for Exclusive Networks. It is getting more difficult to defend yourself against cybercrimes. I think the adversaries are getting, more and more advanced, and as a result of that, we have seen a rapid increase in cybercrimes around the world, as you alluded to in your introduction.
So what does it mean, Jesper, in terms of some of your biggest and most difficult decision in the next 2 to 3 years? So now you're IPO'd. What does it mean for investments? How much will you have to spend on? Are there new ways of attacking and getting into our IT systems that hackers will change?
Yeah, for us, it's it's really business as usual. Tapping into the public markets was a natural next step in the company's life. This obviously gives us an opportunity with the capital we have raised to continue to accelerate the implementation of our strategy and growth strategy. Driving geographical expansion, continue to add new solutions, and frankly accelerate getting those solutions into the hands and arms of the end customers that clearly needs to defend themselves against all these cybercrimes.
Yeah, so Jesper, we were extremely excited to have you on, not only because of the IPO, but just to try and understand, of course, this space which very few people understand. Who are your biggest customers, and will that change? Is it mainly, could it be mainly big companies that are trying to protect some of their IP, or is it, me and my producers just trying to, protect personal data and, for example, bank fraud?
I think it's all of the above. If to explain who we are, it's really, I always say we're the company behind the companies So some of the big partners we have are companies like Palo Alto Networks, Fortinet, SentinelOne, to name a few. And we help them work with these companies and help them get their products out in the markets, oftentimes far away from their own domestic markets. And obviously, as we talk about here with the acceleration of cybercrimes, there is a even bigger need today than there's ever been to continue to drive this adoption of cybersecurity. I think what's driving it is, first of all, we have all changed the way we work. Most companies today are in hybrid environments. People are working from everywhere, the home, the office, cars, etc. And that opens up the network to adversaries. We also use the cloud more than we used to do, and every company is using digital transformation, relying on data, relying on their IP. And as a result of that, there are a lot of people out there who want to get hold of that information. So that is what's driving this secular growth within the cybersecurity market.
Jesper, how much actually do we see, how much of these ransomware attacks, how much of these attacks and hackers overall are state-sponsored? How difficult is it for you to know that figure?
I don't have that figure. I think, it's in the press that some of those probably are state-sponsored, but, I don't have I don't have the background to say what the number is, quite frankly.
How much will your company grow in the next 4 to 5 years? And are there any parts of the market that you're not in at the moment that you want to be in?
Yeah, we are a global cybersecurity specialist, and we are constantly focused on expanding our geographic footprint. Today, we are present in 40 countries around the world. We are doing business in about 120 countries. There are still obviously a lot of markets that we are not in, and we want to grow and expand there. in terms of the future, we want to make sure we continue to grow at or above the total cybersecurity market. That's how we've been performing in the past, and that's the cursor we've set out.
Great. Thank you so much, Jesper Trolle there, the Chief Executive Officer of Exclusive Networks, joining us this morning. Now, stay with Bloomberg Surveillance Early Edition. Up next, we also speak to the London Mayor, Sadiq Khan. If you have any questions for him, please, IB Plus TV Go. The focus, of course, is on the markets. The focus will be a lot more on Evergrande. Evergrande traders selling into stock gains with some of the dollar coupon due. We'll have plenty more on that shortly. This is Bloomberg. Taper timing. The Fed signaled that it's probably ready to cut bond buying by November, and a rate hike may not be far behind. The markets aren't convinced. Evergrande shares and bonds rally from lows as investors bet it will avoid a disorderly debt resolution, but it's yet to make payment on a 5-year dollar note. And John Kerry calls on the world to step up and fight climate change ahead of COP26. We'll speak shortly with the London Mayor Sadiq Khan as he unveils a new initiative to make the city green. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the markets with our Danny Berger looking at all asset classes. So, Danny, what was the reaction to the Fed? And good morning.
Yeah, good morning, Francine. Look, it's pretty interesting because we do have a market that's pushing higher this morning when it comes to U.S. futures. It was also the same way yesterday as well, the first positive session for the U.S. benchmark equity index, the first positive one in 5. So we're up higher by about a 7/10 of a percent rather, for S&P 500 futures. A very interesting reaction to the Fed yesterday, given that, as Tom Porcelli over at RBC put it, that this was a much more aggressive building in of rate hikes than many had thought that they were willing to stomach and take on. So you had equities moving higher. Typically, a more aggressive, more hawkish Fed would cause them to perhaps at least be more muted. But let me also show you what the 530s curve has been doing as well. We've seen some pretty extreme flattening in the yield curve over the past 24 hours, at one point hitting its thinnest level since May of 2020. So a couple things can be interpreted from how the market has taken this. I was talking to Alberto Gallo of Algebris earlier today, who simply said the market doesn't believe it. They think that the Fed is going to keep accommodating, that they're going to keep giving anesthetic to the patient, as it were. Or you could take the other view that by acting aggressively, the Fed may be heading in towards a policy mistake, that indeed the hawkishness really just means that down the line they'll have to reverse course and cut, which is why we're seeing this flattening of the yield curve, Francine.
Yeah, so a muted reaction from the Fed. Plenty of other central banks this week. I mean, it's not dull. Is there potential for more excitement, Danny?
Look, I think perhaps the most potential for excitement is the Turkish central bank. So here's what the lira is doing at the moment. Not too much of a movement. It's a little bit stronger versus the dollar, but we've had just a generally weaker dollar so far today. The drama here could come is if the central bank is very, very dovish. They have very high inflation, but Erdogan has been very clear in saying that the next move should be a cut from the central bank. So if the bank tries to start to prepare people for that, we could see some pain in the lira. But otherwise, we had a decision from Norges Bank just about 30 minutes ago. They did indeed raise rates. That's what we expected. Also, their projection getting a lift. So we are seeing a stronger krona versus the euro. And then we have the pound. Again, a lot of these things are kind of built-in expectations already. The positioning is already there. And of course, we expect the BOE to stand pat, not move. So a pound stronger by about 0.3%. But Francine, I should just say it's really dominated by a weaker dollar today.
Yeah, it certainly is. Danny, thanks so much. Danny Berger there with some of the currencies we're watching. Now, America and the world all need to step up the fight for climate change, or against climate change. That's the message from U.S. Special Presidential Envoy for Climate, John Kerry, just weeks ahead of the crucial COP26 summit in Glasgow. Now, as his country's parliament tries to push through legislation to up climate spending, he pointed to the hundreds of billions of dollars spent in managing weather disasters as impetus to make a deal. Well, he spoke with David Weston.
I think more countries are becoming aware they've got to step up their game before we go to Glasgow for the Conference of the Parties meeting. We also have had the United States, President Biden, put on the table a doubling of the amount of money that the United States will do in terms of the 100 billion total that has to be put together. China announced yesterday they will no longer fund coal externally in other countries. So people are taking steps. People are beginning to build some momentum, I think. The question is, will it be enough?
So as you say, President Biden doubled the commitment from the United States toward the $100 billion. Is that enough? Because I've seen some estimates that say that actually it should be more like $40 billion should be the U.S. share toward that $100 billion.
Well, he doubled the doubling, and I think everybody understands that we have a complicated Congress right now. I think it's what the market will bear, but it's also a significant increase of the United States effort. I mean, President Biden is putting more, about 11 billion plus on the table, and that's an important contribution. Other countries need to also do their part.
You said what the market will bear, maybe what Congress will bear. Is it your best estimate, having served there for so long, that actually you can get the 11.4 billion through this Congress? Yeah, for
sure. I really believe that. I think that there's a majority in Congress now that understands after this summer, Mother Nature's messages to the United States and the world have been pretty clear, and that is that the climate crisis is growing. It already costs us hundreds of billions of dollars. That's what we spend for the intensity of the storms we're witnessing, the flooding, the amount of fire loss, damages, the warming of the ocean. These things are all growing in their ability to be able to disrupt the marketplace. And if you want to look at real cost, that disruption is hundreds of times beyond the amount that's being asked to help solve the problem.
Well, that was our interview with the U.S. Special Envoy for Climate, John Kerry. Remember, you can get more of that interview and all of our climate coverage at Bloomberg Green on TV and online from this weekend. Of course, we'll be speaking shortly with the London Mayor Sadiq Khan about his plans for the city. Coming up, Kathy Wood says she would sell Tesla if its price hit her 5-year target in the coming year. We'll have more on that and a roundup of all the latest tech news next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, here in London, Mayor Sadiq Khan will launch a citywide environmental campaign in the run-up to COP26 today. Now, following the expansion of the ultra-low emission zone in October, the mayor will encourage business and communities to take action to help halt climate change. Now, the Live and Breathe London campaign will highlight the emergencies of air pollution, heat, and flooding in the UK capital. And we're delighted to be joined by the Mayor of London, Sadiq Khan, right now. Mayor, thank you so much for giving us a little bit of your time. This is a campaign to try and spur citizens and businesses alike to be better citizens and fight climate change. What should people do? Is it, the citizen that's not doing enough, or is it big business?
Well, firstly, we've got to recognise that we face a real emergency in relation to both climate change but also air pollution. We're at crossroads. And unless we take bold action, the consequences of either inaction or delay are catastrophic for our city and the planet. Here in London, this summer, for example, we saw as a consequence of flash flooding, as a consequence of surface water flooding, half the lines that are underground not being able to be used with 31 stations closed down. As a consequence of the heat wave, we're seeing older people's homes being really worried about people overheating. But I'm here at a primary school in the heart of our city, Francine, and this primary school 4 years ago, the children were breathing in toxic air on the way to and from school. Because of our policies, the world's first ultra-low emission zone in central London, they're now breathing legal, lawful, clean air. What I'm announcing today is that in 33 days' time, on October 25th, we are going to go ahead with the expansion of the ultra-low emission zone, trying to reduce toxic emissions, NOx, particulate matter and carbon emissions to address the challenges our city, our country, our planet faces.
Could we do more, Mayor? If you look also at some of the, for example, some of the things talking about the rising temperature levels, but also the rising water levels, do big metropolises like London need to go a step further to really make sure that everyone is behind this effort?
Absolutely. Part of my job is, in a non-patronising way, educating Londoners, whether they are pupils, teachers, businesses, politicians with councils and lobbying the government, to make sure we understand the scale of the crisis we are facing. Actually, cities across the globe have really bold, progressive policies. We're asking for not just our citizens, but our national governments to take bold action in 40 days' time when the world meets in Glasgow for COP26 in Paris in 2015. The world agreed what needs to be done. Now we've got to show and act on how it's going to be done.
Mayor, inflation is rising. Energy prices in particular are rising. This is at a time where a lot of the furlough schemes will also be scrapped. How worried are you about living standards of Londoners?
I'm really worried about a potential perfect storm with the furlough scheme ending in this country at the end of this month, the government having taken away universal credit, £20 uplift for every week, at the same time as energy prices are going up. And from next March and April, the government's requiring a disproportionate contribution from hard-working poor Londoners to contribute towards social care. That's why it's so important for the government to reconsider its plans to remove the £20 a week contribution towards universal credit. And it's so important the government doesn't remove the cap there is on energy prices. It's really important we understand the real challenges hard-working Londoners and those across our country are facing. And that's why I'm calling on the government to make sure we keep the energy cap, we keep universal credit, but we don't have those who are working, who are the poorest, paying a disproportionate amount towards social care costs for the future.
Is there anything that you as mayor can actually do to help?
Well, US mayors have done a great job. US mayors I speak to regularly in the 4 years when they had a president who didn't believe in climate change, were still leading the way with some really bold progressive policies to address both climate change and air pollution. We've got a group called C40. They represent a population of more than 700 million and more than 90 mayors. And US mayors are part and parcel of C40. We're meeting also in Glasgow to talk about what more we can do. And one of the things we're trying to do is to share best practice. And so, for example, New York and London are working together to divest our pensions away from fossil fuels. I'm working really closely with mayors across America, from Austin to Phoenix and Los Angeles, about policies to address the crisis in relation to air pollution. It's really important that all of us together, whatever party we're from, whichever city you represent, we try and persuade our national governments to do far more in 40 days' time in Glasgow.
Mayor, are you worried about the recovery of central London because of the working from home trend? Or is that something that could actually benefit, for example, our fight with climate change?
Look, I think one of the things this awful pandemic has done is cause a real challenge for global cities like London, Paris, New York, where we have normally tens of thousands, millions of people coming to the centres of our city to work, to do leisure, for entertainment and to eat. What this pandemic has led to is large numbers of people working from home, doing their leisure from home, doing their shopping from home, doing their eating at home. And if we're not careful, that poses a real challenge to these global cities. So what we're going to do is to encourage people back to the centres of our city in a safe, COVID-safe way, in an environmentally friendly way, walking, cycling, using public transport. Our ecosystems rely upon our centres of our cities doing well. I'm also somebody who believes that Zoom and Teams can't replicate what physical contact brings in relation to creative collaboration, in relation to team building, in relation to mentoring. So I'm speaking to, on a daily basis, not just businesses in London, encouraging them back to heart of our city, tourists to come back to our city, but also to recognise that actually this awful pandemic does, though, provide opportunities. We've used the awful pandemic as an opportunity to increase fivefold the amount of safe cycling in London, to widen our pavements, to make sure we have a green recovery. I think it's possible to have an economic recovery that's a green recovery.
Mayor, on the pandemic, I mean, we have a lot of people actually writing in asking why not enough people are wearing masks on public transport. Will that deter a lot of tourists from coming in?
Well, I use public transport today from early this morning, and the vast majority of Londoners and visitors are in face masks, but some aren't. And that's one of the reasons why I was lobbying the government in advance of July the 19th, when the restrictions were lifted, to continue the national requirement for face masks to be worn, because that gives simplicity and clarity, but also to give us the enforcement powers we need by making it a law. We could then use the Met Police Service, we could then use British Transport Police. The government chose, for reasons they are better explaining, not to do so. So all we can do is use it as a condition of carriage. So our enforcement officers, if you aren't in a face mask, will not allow you onto a bus or public transport. If you're on public transport and you're not wearing a face mask, they will ask you to leave. But I'm hoping Londoners and visitors do the right thing, which is to wear a face mask. You wearing a face mask is one of the most unselfish things you can do, because it reduces the chances of transmission. And when I remind you that 1 out of 3 people who have this awful virus won't show symptoms, hopefully is a motivation to wear a face mask when using public transport, when you can't keep your distance and you may have the virus.
All right, Mayor Sadiq Khan, thank you so much for joining us. Of course, he's the mayor of London on this green initiative. Now, let's turn to some tech stories that we're also watching. Cathie Wood says she would sell Tesla if its price hit her 5-year target in the coming year. Now, the electric vehicle maker's stock is now roughly $750. Her base price target in 5 years is $3,000. Now, for more on all of this, we're joined by Matt Bloxham from Bloomberg Intelligence. Matt, I mean, this, is very high top on red, but actually this seems pretty basic. It's if it hits 3,000, Cathie Wood sells.
Yeah, that's right. I mean, it's a quadrupling of the share price. So I guess if anything, maybe she's trying to make it a bit of a buy signal, strengthening her case that she really sees long-term value in that company. But yeah, it seems like she was just articulating, a fairly straightforward investment framework. That if a stock hits what you think that its fair value is, you sell it. But I think, given an earlier story you had today about shortage of chips for the auto industry, the outlook for the car industry, including Tesla, probably in the next 12 months, suggests that maybe it's not going to quadruple after it's had such a strong run already.
Matt, we also have quite a lot of stories. Facebook, so its chief technology officer is leaving. Is there anything, more to the story?
Yeah, I mean, I think he's obviously a very long-term employee and he's going to be replaced by another very long-term employee. I mean, he was head of the AI unit, amongst other things, and AI is, central to lots of things in the world, particularly for Facebook in terms of how they manage, fake news and, harmful content on their site. So, it's a sensitive role, but I think there's a kind of smooth transition of responsibility there within the company, and I guess it's inevitable that people move on. And sounds like he's really looking to take a bit of a different balance of his life, which a lot of people are doing after the pandemic. So something that they need to manage carefully for such an important role, but looks like it's going to somebody that has a great knowledge of the company and the right kind of skills.
Matt, talk to me a little bit about Apple. So Apple, I mean, there's a couple of rumors about, leaks and people not happy at the company, employees actually being concerned about some of the things happening. And now we have this bonus for, I think it's the first time that Apple is doing this for some of its employees, up to $1,000.
Yeah, that's right. $1,000 for their retail staff, both in stores and online. I guess, we're heading into the Christmas period, which is incredibly important for Apple in terms of selling iPhones. Obviously just launched the iPhone 13. So they want to make sure their stores and their online presence is fully staffed and they can sell as many of those phones as they can to meet analysts' kind of lofty sales expectations for the quarter. I think the leaks, obviously, Tim Cook, expressing some frustration. It is true that, these days there's not really any surprises when they do these big blockbuster announcements of the next iPhone. But I guess in such a large company, leaks are inevitable. And to some degree, companies do participate in leaks to make sure that the narrative in the market is going in the direction they want it to go. So I don't think too much there that could be done really to kind of suppress those leaks. But, the $1,000 bonus, reflects the importance of this quarter to the company and the tightness of the labour market, not just in the US, but globally, I think.
Matt Bloxham, thank you so much for joining us. Of course, he covers all things media and tech from Bloomberg Intelligence. Coming up, the final round. The parties in Germany will take part in a televised debate tonight ahead of Sunday's vote. We're live in Berlin with the very latest. That is next, and this is Bloomberg.
Germany is the biggest country in Europe. It's the driver of the economy in Europe. And so the German election is not only important for Germany, but also for us in Austria and for Europe as a whole. So we are following the campaigns very closely.
Well, that was the Austrian Chancellor, Sebastian Kurz, telling us that the centre-right would suffer if Merkel's CDU-led bloc fails to win in Sunday's vote in Germany. So, as we count you down to the election, we'll also hear from the parties currently sitting in the Bundestag in a televised debate. After 3 debates between the Chancellor tonight, the Chancellor candidates tonight, we also hear from the smaller parties that they may enter into coalition with. So, for more on all of this, on the state of play in Europe's largest economy, we're joined by a reporter on the ground, Maria Tadeo. So, Maria, how significant is this debate ahead of the Sunday election?
Well, Francine, normally you wouldn't really pay attention to a debate like this, as smaller parties usually poll around 10%, so they're not all that significant. And also keeping in mind that we've had already 3 debates with the 3 main chancellor candidates. By the way, Olaf Scholz has won every single debate until now. But the one today really does matter, because polls right now show that the next German government will have to be a 3-way coalition. So the focus will be on the smaller parties this time, in particular the Liberal Democrats of Christian Lindner and Die Linke. There's 2 things that I'll be particularly interested in hearing. One is, of course, the conditions that Christian Lindner will put on the table to back an SPD-led government. If you remember, in the previous election, he blew up the coalition talks when he did not get the finance ministry position. And the second one is Die Linke. You know, there's still this idea of a red-red-green coalition that is being floated around. The SPD has said that they find some of their policies, in particular on the foreign policy and NATO, problematic, and that would derail a possible red-red-green coalition. So those are the 2 things that we will be watching out in this debate tonight.
Thank you so much, Maria Tadeo, there on the ground for us. Now, we'll also be covering the election day, of course, live with analysis as polls close in Germany on Sunday. Don't miss that from 5 p.m. UK time. That's 6 p.m. in Berlin, and that starts on Sunday. Now, this morning, we've had some PMI readings from European nations, big misses across the board, supply delays, and higher prices are hurting manufacturers and services. Now, the figures underscore the conundrum faced by policymakers in the region as they balance keeping borrowing costs low to support the recovery. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz out of New York. We'll talk Evergrande, we'll talk Fed and Jay Powell. This is Bloomberg.
If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted.
You look at this meeting and, it's what the market has been waiting for. Everybody can exhale. We've been waiting for the meeting where they finally talk about tapering. This is it.
We do have some rough road ahead. That said, the Fed is, we're seeing a Fed that's getting more hawkish.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Thursday, September 23rd, our top stories today. Taper timing. The Fed signals it may begin cutting asset purchases in November, and a rate hike may not be far behind. A moment of truth for Evergrande while the distressed developer faces a key coupon payment test on a dollar bond today. And the FDA authorizes a 3rd vaccine dose for those at high risk. The CDC meets today to make its own recommendations. Kailey, we finally have a green day. We're once again buying the dip, and actually traders less stressed about Evergrande as well. What are we seeing in the markets?
Yeah, we finally got some clarity on tapering from the Fed, Francine. And then, of course, we do have to monitor the Evergrande situation. All of that said, it was a broadly positive session in Asia. Granted, Japanese markets were closed for a holiday, so pay no mind to the red on the screen when it comes to Japan. But they opened back up in Hong Kong in a positive way. The Hang Seng Index rising 1.2%, Chinese stocks rising as well. You had the PBOC injecting another $17 billion in liquidity, short-term liquidity, into the system to continue to try to ease fears around Evergrande. And when it comes to Evergrande, of course, we know that they privately resolved the yuan bond payment that was due today. There's also a dollar bond payment that is due today, and that is still a question mark. You are seeing some relief in Evergrande shares. They were up as much as 32%, then that was sold a bit. They're only up 18% as of the close. But the dollar bond due in 2022 is actually just sub 30 basis points. Yes, that's still 30 cents on the dollar, I should say. It was at 24 cents on the dollar earlier this week. So that is actually a bit of an improvement. And you did see some tightening of Asia dollar bond spreads as well after 5 consecutive days of those widening out. I would also just point out the Japanese yen is your biggest underperformer in both Asia and G10. Not a lot of bid for that safe haven today. It's weaker against the dollar by about 0.2%. Now, as for the picture here in the U.S., of course, we did get that Fed decision yesterday. Looks like a taper announcement is coming in November. That was the indication from Chairman Jerome Powell, who also said the taper would be done by mid-2022. You also have that dot plot, some movement. They're now split on whether or not the first hike comes in 2022. We saw stocks rising after that decision. Those gains look like they will continue this morning, with futures up about 0.75% on the S&P 500. In the bond market, we did see a flatter curve off the back of that decision. We actually saw yields on the long end coming down. They're coming back up today, though, up about 3 basis points on the 10-year yield to 133. And you are starting to see just a little bit more flattening when it comes to the 5/30 spread. 95 basis points is the flattest it's been since July of 2020, Matt.
All right, I'm looking at the dollar dropping there and just wondering how the market, Kailey, is reading what we saw from Powell yesterday. Why the dollar weakness? Maybe it's just because it's more of a risk-on day. It has nothing to do with the Fed's hawkish or dovishness, but rather the market's desire to buy shares. We had a little bit of a week by the dip, but it has slowly gathered pace, and now we're looking at more green on the screen. Again, in the core, you're seeing France and Germany do quite well as the periph country of Italy. You can see the boot there in bright green. Take a look at the Stock 600. All of the industry groups are rising right now. You have tech and auto parts leading the way, as well as consumer. So it's very bullish. That's not the defensives that are leading at all. You can see the German bonds gaining a little bit in yield. So investors are comfortable enough to sell them off. The euro and the pound obviously gaining as the dollar falls right now at 117 and 136, but not any different in terms of the handle on the pound. And it's interesting because now we have the BOE to contend with post-Fed. Francine?
Yeah, it's amazing, actually. Tech stocks, car makers leading this broad-based advance to, even if we have those chip shortages. Now, we'll have plenty more, of course, on the markets. This is what else we're watching today. There's quite a lot going on. It's been a very heavy week for central banks. Another big day today with rate decisions from the Bank of England, Turkey, and South Africa. We'll also get the latest U.S. initial jobless claims. That's at 8:30 a.m. New York time. Then the 6 German chancellor candidates debate for a final time before the September 26 election. Yes, we're 2 days away from that election on Sunday. And then CDC advisors finish a 2-day meeting today on COVID booster shots. This comes after an FDA panel recommended booster for older at-risk Americans. So it's almost taper time for the Fed, and rate hikes may not be all that far behind. Well, the chair, Jay Powell, spoke on the timing of that yesterday.
The committee continued to discuss the progress made toward our goals since the committee adopted its asset purchase guidance last December. Since then, the economy has made progress toward these goals. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted.
Let's get more on this with our Danny Berger. Danny, I mean, they were trying actually to divorce, if I can use that word, the difference between tapering and hiking.
Yeah, they absolutely were, and perhaps the market believed it, or at least has accepted that narrative given the reaction. Now, I'll get to that in just a moment. But really, what we thought the drama might center around was the dot plot. And to that degree, they did not really disappoint. As RBC's Tom Porcelli put it, they are building up a much more aggressive hiking cycle than we thought they had the stomach to handle. If you go out to 2024, these projections suggest that we'll get at least 8 rate hikes by that period. And they are evenly split in terms of people thinking we'll get a 2 handle on those rates. Now, given that Powell said we expect tapering to end by mid-2022, given this more hawkish stance in the dots, it's perhaps surprising we saw the market reaction, which, Matt, you were pointing out, a weaker dollar, stronger stocks, and at the same time, a yield curve, which steepened very aggressively, at one point getting its steepest since, or rather flattened its most flat since May of 2020. Now, the reasons for this, I've spoken to so many people, and every single person has a different reason. Now, on sort of the more optimistic side, you have what you were saying, Francine, that people believe the Fed, that just because they're about to taper doesn't mean they're going to be aggressive with hikes. On the other side, you have this fear that they're acting too aggressively and might result in a cut down the road.
Obviously, Danny, it would be nice if the week just ended after the Fed decision, but we still have a lot of other central bank action on deck. Bank of England, what are you expecting?
Yeah, no rest, Kailey, especially after you had that great coverage of the Fed decision. You get no rest. We have this decision from the BOE coming at noon. We are expecting them not to change, to hold rates, but it's a really delicate balance that they're going to have to strike. This isn't the Fed. They have issues like Brexit, which means more supply shortages, higher inflation that really overshot their target. So they might say, look, the economy is stagnating, so we're not in any rush to raise rates. The market, however, pricing in a rate rise by May of next year. So in this announcement, in the press conference, they might have to really talk down the markets and say, because of what the economy is doing, you need to push out your expectations for a rate rise. Really at stake here is sort of the believability, their ability to communicate and keep prices in line.
Danny, thank you so much. Danny Berger there, putting all the central bank action into perspective. Now, it's a key test for Evergrande today. That's as the distressed Chinese developer faces a dollar bond interest payment deadline. Kailey, I had a great chat with Tom McKenzie. I know he's coming out shortly, but he was reminding me, first of all, they also make watered bottles, which I forgot about. And then they have a car unit for electric vehicles that was valued as much as Ford last year.
Interesting. I mean, the point of the story, Francine, is that this is a giant. And when we talk about this company's liabilities, we're talking $300 billion worth of liabilities. So it's not even just about the bond coupon payments that are due this week. Yes, we know the private resolution has come for the yuan-denominated bond, but the dollar bond is still a question. And it's not even just about today and the deadlines today. It is about the millions more in payments that this company is going to have to make over the next year, Francine.
Yeah, and that's $1 million question, $1 trillion question, because we don't know exactly the second or third round effects. The man that understands Evergrande inside out is Tom McKenzie. Well, you understand it more than most.
I don't know if anyone understands this company inside out.
But it goes back to the problem of actually we don't know. If it defaults, we don't know how far it reaches.
That's absolutely right. So the consensus, as we've been discussing over the last few days, is that you will get some kind of controlled restructuring, that this cocktail of policies that China's officials have used before, and they've tested it, tried and tested with their playbook around HNA and Anbang and Baoshan Bank, they'll put that to play. But as Francine is saying, it's the financial engineering linked to Evergrande, with its wealth management products and beyond. When you lift the hood on that, what are officials going to find? The other key question, of course, is the question of contagion, the channel of contagion. We were hearing from Trivium in Beijing yesterday. They were saying, look, don't look at the credit markets. Look at what's happening with Chinese house buyers on the ground. Is their sentiment changing?
Tom, I just want to bring our audience and our listeners some breaking news. We just got a red headline crossing the terminal. China is telling Evergrande to avoid near-term dollar bond default. We have been waiting for more action from China. And of course, this is the dollar bond that we know is due today. Technically, there is a 30-day grace period, so it wouldn't default automatically. But Tom, just let me know what you make of this statement from China and how you think Xi Jinping and the Communist Party is going to move forward from here.
This is interesting because a number of watchers of this story had suggested there is a hierarchy And near the bottom of the list are those dollar bond holders. Now you have a statement from China. We'll have to find out exactly which ministry this is coming from, saying that Evergrande should avoid defaulting on its dollar bond. And as you say, we have a 30-day window. We may not get a resolution or clarity on this today. We'll have 30 days potentially for this to come into focus. But I think that is important, and it may lead to questions as to whether or not that breakout of the hierarchy is as it seems. Again, we'd had the view that you're going to get the employees, you're going to get the owners of wealth management products, and of course those owners of 1.5 million Evergrande properties around the country who still want to get, of course, their property or their money back. They will be protected. At the bottom of the list, the view was, near the bottom of the list, would be those dollar bondholders. This maybe changes the view on that.
Yeah, I mean, it's really interesting, Tom. So this story just breaking on the Bloomberg terminal, and it's basically saying, so this is financial regulators issuing a number of things to Evergrande, but at the same time, not offering financial support to Evergrande, because it's quite quirky that China, who can actually shore it up, is saying, Evergrande, look, for the moment, you could be on your own. I don't know. We'll find out a lot more, of course, throughout the day.
Or we're about to take you over, right? I mean, they're saying, like, pay your debts, but if they don't have the money, they won't be able to. And, you know, some news sources like AsiaMarkets.com are reporting that the CCP is about to take control of Evergrande. So I wonder, Tom, what you think of that possible nationalization of this company.
Well, it's a playbook they've resorted to before around, again, Baoshang, H&A, Umbang, all of these risks around conglomerates that have bubbled to the surface, and they've had to put this playbook to work. So they can dust that off again, and they can get the state actors involved. They can shore up the banks that have exposure to this company. That is the strength, of course, of the political economic system that China has. But again, I would say watch the channel, the contagion channel, when it comes to the sentiment of Chinese house buyers. Again, the property sector accounting for 20 to 25% of China's GDP.
And Tom, again, policymakers trying to learn more about who holds Evergrande's debt. That doesn't fill me with confidence. It's from our story. And also, it's unclear whether these officials believe that the company should eventually impose losses on offshore credits. Our Tom McKenzie all over this story, and of course, he'll bring us up to date with anything to do with Evergrande. You can also watch our special coverage, The Evergrande Effect, tonight, 9:30 p.m. in New York, Friday morning at the China Open for our viewers in Asia.
All right, let's get over to Washington right now. 5 months after President Biden unveiled his social spending vision, the administration is struggling to unite congressional Democrats behind a bill that can pass in the face of united Republican.
All right.
About this.
I think we've lost, actually, our Matt Miller. I don't know whether it's a 2020. I think you're back. I don't know whether there's a mute button, but we'll work on that. And we'll get straight to Jack Fitzpatrick, Bloomberg government reporter, who joins us now from Washington. Jack, what's on your radar today?
We're hearing the progressives and moderates debate with each other this week, heading toward a Monday vote on the infrastructure package that passed the Senate with bipartisan support. The moderates believe, or at least recently believed, they could pass that despite progressives opposing it, because progressives are holding out for this larger $3.5 trillion tax and spend bill, or whatever that the top line will end up being. The Republicans, though, in the House are whipping against this bill as leverage, so it's looking a little less likely that they can actually pass that. There were 3 meetings among Democrats with the president yesterday. None of them really seem to be a breakthrough. This is something that seems to be appreciated by Democratic lawmakers, but it doesn't change the difficult calculus on counting the votes, or the difficult timing between these 2 different bills that really are on different tracks. So they're preparing for a critical Monday vote that is going to tell everybody who really has the leverage between the moderates and progressives.
All right, well, we'll know you'll be keeping track of all of it. Jack Fitzpatrick of Bloomberg Government, thank you so much. Let's get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S. And I wanted to begin with a newly public company, Freshworks. It's a software company, made its public debut yesterday and rallied 32% in its first day of trading. Those gains look set to continue today. The stock up a little more than 4% in pre-market trading. Also moving to the upside is Joby Aviation, of course, the commercial taxi company. It is moving to the upside on an upgrade from Morgan Stanley. It got a new overweight and has a $16 price target on the stock. It's trading just above $10 a share this morning, up the better part of 6% in pre-market trading. But plunging to the downside is Ergo. It is a medical devices company that actually makes hearing aids. And it said yesterday that the Department of Justice is probing it, a criminal probe related to insurance payments for federal health plans. Number of analyst downgrades off the back of that. The company also suspended its forecast, and the stock is plunging in pre-market trading, down 56% before the bell, Francine.
Yeah, interesting. It's actually unrelated, but I spoke to someone to, a company actually that was valued at $10 billion that also makes earpieces and hearing aids here in Europe yesterday. Coming up this hour, Paul Donovan, UBS Global Chief Economist, and later on the FDA's booster recommendations, we speak to Joshua Sharfstein of Johns Hopkins. This is Bloomberg.
Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, I want to welcome our listeners on London DAB Digital Radio and tell you, I'm going to pull up a chart right now. You can't obviously see it, but imagine Michaela Maroney's face after she was denied a gold medal at the Olympics. The chart is entitled Not Impressed, and the reason is energy stocks have really done poorly in relation to the S&P 500. I'm showing the S&P 500 sort of taking off from the bottom of 2020. My producer, Dan Curtis, brought this chart all the way back to 2011. I don't know if that was necessary, but the important part is the last couple of years here, the energy producers have massively underperformed the index. And in fact, they've even underperformed energy itself. If you look at oil, the recovery since oil went negative has been about $110 in gains, and still energy companies, you would have lost money if you bought them when oil turned negative. I want to bring in Jonathan Stubbs from Berenberg, where he is an equity strategist, and talk to him about this because, Jonathan, you've highlighted energy underperformance in a recent note, and I wonder how long you think it's going to take for these producers to catch up with the benchmark and the underlying commodity.
Yeah, we put a note out recently. We think the sector's pretty interesting. It's not the only sector that we have a focus on right now, obviously, but historically, energy does well when the global economy is growing and when demand is strong, and clearly that's what that's a period we've entered into now. We think our base case that extends into next year. It's what we call synchronized global growth. That typically supports commodity prices, including oil prices, also bond yields, and obviously with central banks sort of moving towards tapering, with inflation pressures, bond yields should be heading higher into next year, and typically energy outperforms, as it did very strongly, especially in the US at the start of this year. Energy outperforms and bond yields are rising, and the sector's flat on its back. So there's not much love there. There's an ESG headwind. We think it's an interesting time to be looking at the sector.
So what exactly are you looking at, Jonathan? I mean, one of the things that, is quite quirky, which maybe a lot of people don't think about, is that it's actually the old school commodity producers that also make some of these rare, components that we need for the transition to green. So is that where the attractiveness is?
I mean, there's a lot of value across the whole sector. There are various companies, pushing transitions into renewables, et cetera. The old schools of majors just look very, very cheap. I mean, in Europe, the biggest sort of market cap oil companies, the sort of the well-known names, they trade on sort of single-digit PEs. Their cash flow and balance sheets were very distressed last year, but that's recovered, very strongly. So, the biggest European majors now have, net debt EBITDA less than 1 time, so balance sheet very strong. And the free cash flow yields for these companies, the biggest 5 on average, is back to sort of 15%. So they're paying dividends again. They're growing dividends. They've got cash, which gives them optionality. They've got balance sheets, which gives them optionality. And that optionality can fuel shareholder returns, or it can fuel investments into some sort of transition strategy, which some of them are pursuing. So I think underlying, there's a lot of value here. Most investors don't want to go near a lot of these names for ESG reasons, but I think there might be other buyers out there who find the value in these companies.
Jonathan, I want to come back to breaking news we got earlier this hour out of China. China apparently has told Evergrande not to default on, in the near term, on its dollar bonds, but not really providing direct assistance to this property developer either. How do you think about the bleed-through potential into European equities?
Yeah, I think it's an interesting period right now and a challenging one for investors. We've had this sort of recovery narrative playing out in markets for the last almost a year now. And I think most investors, I mean, certainly our base case is that recovery extends into next year. But there are a lot of risks on the table right now for the next couple of months. And China's a big part of that. You've got Evergrande, you've got weaker macro data. And you've also got a credit cycle in China, which has been turning down for the last few months. So it's all joined up as China risk there. Before you start talking and discussing sort of geopolitical developments as well, which are another layer of risk. You then have uncertainty in the northern hemisphere about the winter and sort of respiratory viruses. You have friction between politics and people.
Well,
so
you've got the gas issues. Jonathan, what do you think? Bring it back to energy. What do you think about the natural gas price climbs that we've seen and the shortages that we're seeing in, for example, the UK and Western Europe?
Well, again, I mean, it's symptomatic of a number of things. Political developments. Brexit is part of this. Supply disruption and the relationship between Russia and mainland Europe. And clearly, the demand environment, there's this shift back to sort of synchronized global growth, as I call it, and sort of demand is feeding very aggressive sort of price shifts in many parts of the commodity complex and elsewhere. And we've seen that over the last year or so. So whether it's uranium or whether it's gas prices, clearly that then puts pressure on different parts of the chain. You're seeing a couple of companies, in distress, energy companies in distress in the UK. You're seeing governments having to get involved, and you're seeing prices come to consumers some of whom are not in a sort of strong position to deal with that. So
Jonathan,
it raises a specter of inflation as well, which again is one of these sort of big risks that market participants have to digest and process.
Thank you so much, Jonathan Stubbs, there, equity strategist at Berenberg. Now let's get straight to the Bloomberg First Word News. And more than 1.5 million households in Britain are being forced to switch energy suppliers after 2 more retailers collapsed as prices soar. Well, that brings the tally of firms going out of business to 7 since early August. The UK Business Secretary said earlier this week that more companies would be in trouble as capped retail prices fail to cover costs. Now, the U.S. Food and Drug Administration has authorized a 3rd booster dose of the Pfizer-BioNTech vaccine for at-risk groups. Now, that includes people over the age of 65 and those at high risk of severe illness. It allows a single dose at least 6 months after the original shots. The total hit to revenue this year for the world's car makers is now estimated at $210 billion. Now, that's the latest dire forecast from AlixPartners, which says the industry will build 7.7 million fewer vehicles in 2021. Due to the chip crisis, despite efforts to shore up the supply chain, semiconductor availability has worsened as automakers exhaust stockpiles and other industries have no more to spare. I mean, some of the craziness around this is also secondhand cars. Matt Miller, their price has gone up some 30% because of it.
Yeah, absolutely. And it doesn't seem like it's coming down anytime soon. I checked the prices on I would say daily, but really, truly, it's an hourly basis, and they continue to remain incredibly strong. I start to wonder if internal combustion engines are just going to appreciate from now on because people are worried they're not going to be able to buy one in the future.
Yeah, we'll talk a lot more about cars on this program. Also coming up, we talk Fed and Evergrande with Paul Donovan. He's UBS Global Chief Economist. This is Bloomberg. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kailey Leinz in New York. Matt, it's very clearly a green day. Evergrande, let's not worry about. The Fed, all good. We're buying the dip.
Yeah, absolutely. I mean, we didn't buy the dip with such vigor on Tuesday. It only started to ramp up, I thought, a little bit yesterday, and now it looks like the markets have decided they're totally cool, the water is clear, you can go back in again. But the interesting thing is we haven't really had that kind of scare in quite a long time, since really the beginning of the pandemic. So it wasn't a buy the dip the way we've seen it thus far. I think JP Morgan has written some research on the fact that the outflows from ETFs were absolutely huge. And so maybe that marks a turning point in the way this rally has run.
Yeah, maybe. Kailey, is it playing out in the markets?
Yeah, well, it's interesting. To Matt's point, we actually didn't see strong dip buying at all in the U.S. until yesterday. The S&P snapping a 4-day losing streak. It has been a bit stronger in Europe, and that does indeed continue again today. The Stock 600 higher by more than 1 percentage point now. Every single sector within it is in the green, including technology, which is leading the way. Here in the U.S., we did see gains off of that Fed decision yesterday. Yes, a taper announcement likely coming in November. They expect it to be over in mid-22, and we saw some movements in the dots, but the market really took it in stride. Right now, S&P 500 futures up another 0.8%. In the bond market, the end result of the Fed decision yesterday was a flatter curve. Today, though, we are seeing selling in the bond market, yields moving up on the 10-year by about 4 basis points. We're sitting at 134. And then I would just point to oil as well. A little bit of weakness, down 0.2%, trading at $72.11 a barrel. As for some stocks moving in pre-market trading, we have a number moving on analyst recommendations. First up, Joby Aviation was initiated an overweight at Morgan Stanley. It's up 5.4% now. SoFi and Plug Power also each getting positive analyst action. To the downside, though, is Trimble. It's down about 2.2%. It's a GPS software company cut to underweight at Morgan Stanley. The analyst putting a $74 price target on the stock, and it's trading at $88 this morning, Matt. So some downside is seen.
All right, so and some pretty techie names there to watch. Now, as we count down to the Sunday election here in Germany, we'll hear from the main parties in a televised debate tonight. The smaller parties that they may enter into coalition with will also take part. For more on the state of play in Europe's largest economy, we're joined by Maria Tadeo, who's in Berlin on the ground. Maria, how significant is this debate ahead of the Sunday elections?
Well, Matt, you know that normally you would not pay attention to a debate like this. You focus on the big ones, and we've had 3 of those already. And by the way, Olaf Scholz has won every single one of them. But today really does matter because this is about the future coalitions. And if you look at polls, we know that the next government in Germany is very likely going to be a 3-way coalition. So we're going to hear for the smaller parties, and they may have a big say nonetheless in the next coalition. Now, there's 2 things that I would be interested in tonight's debate. One is a hearing from Christian Lindner from the Liberal Democrats. Remember, this is a traffic lights coalition. The market seems to like this coalition too. I'd be interested in terms of the conditions that he will put on the table to join in this government. Remember, in the previous election, he blew up the coalition talks when he did not get the economy ministry. And then the other one is Die Linke. This is the further to the left party. This has been floated as the red-red-green coalition. This is the outcome that markets would find the least favorable. The SPD has said that they have problems with their foreign policy, especially when it comes to their positions on NATO. So it'll be interesting to see whether or not they soften those positions going into this.
Thank you so much, Maria Tadeo, there on the ground for us. And this Sunday, we'll bring you live coverage and analysis of Germany's election. Don't miss that, starting at 5 p.m. London time. That's 12 p.m. in New York. Now, more on the markets, on the economy, the world economy, as the Fed and Chair Jay Powell take a more hawkish stance. We'll have plenty more, of course, on the Fed. He's with us in person in the studio. Paul Donovan, Global Chief Economist at UBS. There you go, Paul. I lost my voice because I couldn't believe you're here. I was all in the hustle for a second. When you look at what we heard from Jay Powell and what we heard actually from the Fed, I mean, they're hawkish, but the market are pretty relaxed because they believe that, sure, first they taper.
Yeah.
And then an interest rate hike will maybe think about it.
Yeah, exactly. And I think this is the difference from the taper tantrum back in 2013. The Fed has clearly distinguished between the quantitative policy, which is all about the growth part of the economy, and the monetary policy, the interest rates, which is more about inflation. And the Fed, again, last night, reiterating the current inflation is transitory, it's going to be fading. So the rate hike thing is pushed a little bit further out. And I think that the sort of the turbocharged taper, a little bit of a surprise. It's coming in a relatively short period that they're planning for this, but the markets are okay with that at the end of the day.
But the markets are okay because they don't think, do they believe the Fed, or they think actually it's just, they're more short-termists?
I think it's because there is actually a reasonable amount of belief in what the Fed is doing. And it's fairly obvious the US economy doesn't need large amounts of liquidity anymore. We needed it last year because everyone was hoarding cash. Everyone was putting cash under the mattress. But now they're going out and they're spending that money in the shopping malls, or the virtual shopping malls these days. The money's being put to work in the economy, so you don't have that need for liquidity. And this has been very, very obvious throughout this year. So I think there's actually almost a sense of relief that the Fed is getting on with it and going back to normal, going back to a very slowly growing balance sheet.
Does it matter that the balance sheet is still growing, Paul? I mean, does it matter that the Fed has this massive $8 trillion balance sheet at all?
I don't think it does in the right context. And now the first point is central bank balance sheets always grow. The economy grows, the balance sheet is supposed to grow by roughly the same amount. You're supposed to keep a stable balance sheet to GDP ratio over time. So that of itself isn't a problem. Now, the size of the balance sheet, the very large amount of liquidity that's been pumped in, I think that's reflecting the fact that the US economy and the global economy has become a bit more cash-orientated. So, for example, the Bank of Japan has always had this massive balance sheet because Japan's a very, very cash-based society. And the US, of course, who used to use a credit card to buy a newspaper, well, now we're going to perhaps a slightly more cash-focused US, so that does require a larger absolute size of the balance sheet.
Paul, I was listening to the chairman's press conference yesterday, and he continually referenced supply chain issues that to this point have proved a lot more persistent. Do you think the Fed is still underestimating the persistence of inflation?
No, I don't. And we're starting to see very strong disinflation forces. Matt will be delighted to learn that used car prices are already decelerating rapidly, and they're going to turn to deflation. We're going to get absolute negative price changes coming through before too long. We saw demand weakening in the airline industry, and what happens? Soon as you get demand starting to weaken, there's a mini price war going on. There's really aggressive price competition. So I think we're seeing evidence of this transitory nature. I would argue that to blame it all on supply chains is a bit disingenuous. Because, of course, what we've had is extraordinary demand, which has overwhelmed supply. And that's slightly different because the extraordinary demand we know doesn't last forever.
Well, let's also talk about another supply issue then, Paul, as it relates to the labor market. The chairman went to great lengths yesterday to distinguish the criteria for tapering versus liftoff, and he continually said we're not going to hike rates until we've reached maximum employment. Does the Fed need to redefine what maximum employment is?
Well, I think economists do. I'm not sure the Fed chair is necessarily the best person to define maximum employment.
Fair enough.
Economists should be defining maximum employment. And give us a couple of years and we'll tell you what it is now. Because this, of course, is the problem. We are in the midst of enormous structural upheaval. It's not just the pandemic. The pandemic has been a really sort of superpowered cyclical event, but we have accelerated structural change, the fourth industrial revolution. There are things like shifts to working from home, which change things. The more time I spend working from home, the less likely it is that my local sandwich shop near my office is going to be employing people because my consumption of overpriced sandwiches in the City of London goes down, so you change employment patterns, and we need to deal with all of this. So understanding what the new natural rate of unemployment is going to take some time. We can approximate it, we can't be certain.
How much is growing inequality, still at the forefront of our issues? Because we wrote a story a couple of days ago about how housing prices are just exacerbating inequity. And I think Kailey shared a story with us on this morning's call about Hong Kong building apartments that are the size of 2 king-size beds. I mean, when you say working from home, only the privileged are able to buy a home these days.
Well, frankly, it's only the middle-aged, and I'm not sure that I count as privileged just because of my age, but absolutely, it's the older generation that have the access to this. Now, if you've got a vibrant rental market, that can be an offsetting factor, and you can see that coming through. But we do see these intergenerational issues, and that is a clear concern. And we, I think, are going to be facing up to the issue of not just inequality, but relative shifts in income and status as we go through structural change. Because whenever we get something like the fourth industrial revolution, whenever we get this structural upheaval, people's relative social position starts to change, and that becomes a very, very serious issue in the wider economy because people resent it. Everybody resents it if they see their income falling. What they really resent is when their income is going down and their next-door neighbour's income is going up.
Social media.
Yeah.
Paul, talk to me a little bit about Evergrande. What happens if it defaults? Is there a second term and third round effects that we're not looking at?
I am inclined to think not. So Evergrande has quite wide exposure in the Chinese financial system. It's got a lot of counterparts, but because of that, it's relatively shallow exposure. We don't have this enormous, right, this institution is now in serious problem because they've got 50% of Evergrande debt. That's not what's happening here. So I think that this is a largely local problem to China, and is something which I think the authorities can and will contain. What I think this situation has done, along with several other measures recently, is remind us that there is perhaps a risk premium about regulation, about procedure, about rule of law in a country like China, where the way that these things are negotiated and the way that these sort of situations play out is perhaps not quite as transparent as other markets, and investors are requiring a risk premium as a result.
Paul, thank you so much. Paul Donovan there, Global Chief Economist at UBS. Now, coming up next on the FDA's booster approval, Dr. Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. He's coming up shortly, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an exclusive interview with the Prime Minister of Greece, Kyrios Mitsotakis. This is Bloomberg. The FDA has authorized a third booster dose of the Pfizer-BioNTech vaccine for at-risk groups. That includes people over the age of 65 and those at high risk of severe illness. And it allows a single dose at least 6 months after the original shot. So here's my thing, Matt. I am not eligible for one because I am not over the age of 65 and I don't have any, thankfully, autoimmune issues. And it's also a bit confusing as to whether someone who received a Moderna shot or a J&J shot is then able to get a Pfizer booster if they do meet those relatively narrow criteria.
Yeah, I don't know. You'd have to ask a doctor. But I'm thinking we might have one on the line.
I think we do. Let's ask a doctor. Dr. Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean, joins us now. So, doctor, I don't know if you just heard me, but let's just start with how relatively narrow this scope is of who the FDA says could get a shot. Do you think it's too narrow?
I think that the decision makes sense. I mean, the FDA looked at the data, the CDC presented to the FDA, and you had a really good discussion at the advisory committee. It'll be people who receive the Pfizer vaccine who fall into these different categories based on the fact that there looks to be some reduction in protection over time from the Pfizer vaccine. I think we'll see recommendations for the other vaccines pretty soon. You know, big picture, I think these boosters will be somewhat helpful, but not a game changer for the people who receive them. We're talking about a modest decline in effectiveness and a little probably temporary bump up from the booster. The really important thing, though, is to get people who are totally unvaccinated vaccinated. That's just a huge jump in protection.
How do you do that, Josh? How do you incentivize people? I mean, there's been a number of, people, big companies saying you can't come to work if you're not vaccinated. I think you could also enter in the free, in some states, the lottery. Is there anything else that the U.S. and especially states can do?
Well, I think it's really important to be very persistent with outreach efforts. That's important. I think the mandates work in getting more people vaccinated, particularly people who need this for their job. I go out vaccinating, and most of the people coming in are saying, look, I got to get it for my job, and it's probably a good thing anyway. I've been just putting it off. So I think that is that's another way to do it. I'm a little worried that if if the entire focus goes to boosters, that will lose energy in that effort to keep getting people vaccinated. So it's just going to be really important to balance out the need to follow up with boosters, give people the ability to get boosters, but press forward for those first shots. That is really going to be the thing that helps the hospitals and just reduces the pressure of the pandemic.
Hey, Doc, my barista told me she learned on TikTok that some people couldn't walk after getting the vaccine. Are there any known side effects that aren't like 1 in a million that you're seeing from the vaccinated? There is so much misinformation about the vaccine, and that is also another thing that we need to do is to really counter that. I mean, I think someone said that it was going to be spread by salad dressing without, not kidding. I mean, it is just crazy what is out there. In terms of side effects, well, there are temporary side effects that a lot of people, have, which are like a day of fatigue or headache or a fever. But the most common is for younger people is the temporary inflammation around the heart, which is basically also very rare and resolved. So it's not like anything. There's nothing that has no side effects, but compared to other vaccines, compared to medical treatments, and certainly compared to COVID, which not only has the risk of horrible illness, but this long COVID syndrome, the vaccination is incredibly safe.
Thank you so much, Dr. Joshua Sharfstein of Johns Hopkins. The Johns Hopkins Bloomberg School of Public Health is, of course, supported by Michael Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. Wait, Milo, you have a barista? What are you, like a millennial?
I have a coffee shop under my house. Literally below my apartment is a coffee shop. So I've started to go there like every morning as I become more and more addicted to coffee.
I know, it's been like 2 weeks you've had coffee. Barista, please don't look at TikTok. Look at Illy Cafe to make better cappuccinos for our Matt Miller. Later today, we discuss travel post-COVID with Expedia Chief Executive Peter Kern. That's at 5 p.m. in New York, 10 p.m. in London. And this is Bloomberg. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. We're also joined by Tom Keene, co-anchor of Bloomberg Surveillance. And I know, Tom, you'll be looking at exactly what we heard from Jay Powell and what it means for treasuries going forward.
This news conference was underplayed. It was going to be a snooze fest. It wasn't, Francine. John Farrow and I are really focused on how coordinated it seemed the press was in some delicate questions yesterday. Away from that was the Fed speak, and that was best personified by curve flattening. The vanilla curve is 2 years to 10 years. If you go out further, the standard curve is a difference in yield between the 30-year and the 5-year. Down it comes a number of months ago, some stasis, and this is an incredibly elegant trend toward a flattening beginning in 2026 and on out.
Tom, we were speaking with Paul Donovan earlier, and he calls this the turbo taper. He said the pace of the taper is what was so surprising to him. Do you agree?
I totally agree on the x-axis. It's all about the x-axis. And Ira Jersey agrees with Paul Donovan. And what Ira found so fascinating off of fixed income at Bloomberg Intelligence is the mystery out to 2014. I mean, there's some certitude here about where we are now out to 2022. But there's a massive split between the market, Kailey, and the Fed on what happens 2 years out.
Even Jay Powell urged Congress not to delay raising the debt ceiling. Is this debate going to be more damaging than previous debt ceiling debates have been?
Don't know. It's a really good question, Matt. I am an amateur at this in that I've grown up with debt ceiling debates. They always end. Everybody kisses and makes up. Is this the time they don't? And that's the debate that we see.
Tom Keene, I'm looking forward to your program.
Sure.
Tom Keene, their co-anchor of Bloomberg Surveillance, which starts shortly. In the meantime, this is what else we're watching. And Kailey, you're looking at earnings.
Yeah, Nike earnings coming up after the bell. Really what I'm focused on is the forecast and to what extent factory closures in Vietnam are going to impact the company's results, because Nike sources about 40% of its products from Vietnam. So those supply chain issues could hit them quite hard. It will be very interesting, Matt, to hear the commentary from executives surrounding that.
All right, I'm going to be watching used car prices. We've been talking about this, Francine, with Paul Donovan as well, and he says the gains are decelerating. I'm in the market for like a 1987, 1988 911, the one with, the Getrag 5-speed manual transmission that everybody wants. Yeah?
The problem is that, decelerating could be from 30% rise to like 26%. That's still a lot.
Good point. It's like the taper. It's still going to build the balance sheet. They're just going to build it at a slower pace.
And Matt Miller only accelerates.
Only, and ready to spend the big bucks for the old, beautiful cars. I'm looking at the Bank of England rate decision, so it comes out in about 1 hour and 5 minutes. The focus, of course, is on inflation. There's a number of economists that are expecting them, of course, also to, focus on the risks to the economic recovery. Markets currently pricing in the first rate hike by May next year. More Bloomberg surveillance is coming up ahead. We'll also be hearing from the Norges central bank governor, amongst others. This is Bloomberg.